Welcome to Investors Insights. Our topic today, energy prices in your wallet. That's a topic that continues to come up as we deal with all the geopolitical things going on in the world, as well as here nationally in our own country with inflation. We've got some incredible news and information for you. It's always energizing for me to have this meeting with my three distinguished colleagues, as I refer to them, Bobby Norman, Trey Booth, and Tom Miller. Guys, you did great this morning. Thank you for all your hard work over the weekend and research that you did to put this together. So with that said, Bobby, I'd like to start with you because energy prices and your wallet, simultaneously, people are now saying, should we be in energy versus technology? You brought up some interesting topics about technology this morning. We've seen with AI some things really moving fast. And so talk about that. And then Trey, I'd like to come over to you and to Ty to talk about the whole energy and inflation issues.
Yes. So as we've seen a spike in volatility in recent weeks, we've been analyzing the impact on certain sectors of the market. And one sector we're analyzing closely is technology. And there have been concerns for the past few years that the technology sector has been overvalued, which has made investors worried that the sector has been so overvalued that it would pull down the overall market.
Right.
One potential positive that we have seen from the recent volatility, as you can see in this chart here, is that we have seen the decline in tech stock valuations from a forward PE of around 40 to about 20 times today, roughly in line with the S&P 500, which we haven't seen in years. And now we look at forward PE, or price to earnings, because it helps us gauge if a stock is overvalued or undervalued based on growth expectations going forward. And forward PE acts as a forward-looking indicator, placing more emphasis on projected growth rather than historical growth. So it's an interesting time because tech stocks have come down in valuation, but earnings are still expected to grow in the mid-teens or better. So because valuations have come down and tech remains a large weighting in the S&P 500, it'll be interesting to see if the lower valuations of the tech sector attracts new buyers. So yes, earnings could still get cut if tensions with the Iranians drag on. But this matters because new money being invested in technology stocks due to better valuations can offset the negatives of market weakness and help the overall market. So we'll continue to watch the technology sector for renewed strength here.
Yeah, and also you're confirming the fact that people will start to go, oh no, the market's getting a lot more volatile, but there are times volatility, news information that breaks out and everything can create opportunities. And I appreciate you pointing that out in your report today. So we'll watch all that closely. And then Trey, really appreciate your research as well, what you did in terms of consumer price index, talking about inflation, energy prices. There's a lot of news headlines out there about panic, things skyrocketing, all these kind of things. So talk about your research and data.
Yeah, thanks, Greg. Yeah, we kind of alluded to this last week that the CPI, the Consumer Price Index report, which came out on Friday, was something we were going to watch closely in terms of the week's worth of data. And as expected, the CPI did see a surge in the month of March largely due to the large increase in energy. CPI jumped by 0.9% month over month. That's a relatively large increase. Over 3/4 of that move higher, though, was attributed to the 11% increase in energy. And so, but when you look at overall CPI, a price of one good going up really doesn't impact the cost of everything. So let me kind of break it down to something a little simpler than just what CPI is. Let's say you only spend money on two goods. You drive, so you spend money on gas, and then you eat, so you spend money on food. You have $100 to spend. So let's say you spend $50 on gas, $50 on food. Then the price of gas jumps, and so now you have to spend $60 on gas. Well, you can no longer spend that $50 on food. So now you only have $40 to spend on food. Unless there's additional money created, the overall price of everything doesn't go up. The price of one thing calls what we call in economics demand destruction in another to balance that out. And we saw that in this month's CPI report. Under the hood, if you look at all the other goods outside of energy, over 80 consumer goods that are included in CPI saw price decreases in the month of March. So that's 40% of the CPI actually saw prices come down. So that's demand destruction, which on an economic wide, that kind of balances out. But that's something you don't want to see month in, month out. You really want to see people being able to spend money where they want to spend it. If you look over the trailing 28-day credit card spending, we saw a 4.9% increase in U.S. consumer credit card expenditures over the past 28 days. 40% of that increase went to the gas stations. And so the consumer, thanks to tax refunds, can absorb this higher price. That's why you're seeing overall spending going up, because the consumer has more money to spend. But I guarantee you the average consumer would not want to spend that 40% of what they're spending at the gas station. And so that's kind of forcing consumers who would like to spend where they want to spend. They're forcing that price of fuel up, which is causing demand destruction in other parts of the economy. So as this goes, you may see strength in the energy parts of the economy, but you're going to see weakness in other parts. And that's where that kind of spreads out to the rest of the economy from just hitting fuel. The longer it goes, you may see impact on other parts through demand destruction as consumers are forced to spend more of their wallet on fuel, and that leaves less room in the wallet for other parts of the economy. So something we're watching closely. It's a little, sorry for getting into the weeds there, but that nuanced point is something we're watching closely in terms of how the longer this goes, how this impacts the rest of the economy.
Well, and what I appreciate is going into the weeds, you kept it in terms that people can understand. You did a great job on that. And it's going to be a topic, and demand destruction is a phrase that you're going to be hearing from us as we continue to watch that. And there again is another example as to why we do these vlogs. We want you to be prepared in your conversations with other people in your community, your church, your colleagues at work, and you're confident so that as the headlines come out that are all emotional, a lot of times we're backing it our scenarios here with facts. So great job there, Trey. Thank you. And then Todd, we've got to address the Iran U.S. scenario based on economics, the straits. It's a center of attention right now, and everybody's declaring that this is horrible or that's horrible, or things are going to skyrocket. All that. Just talk about what you discussed in our meeting today.
Yeah, to build off Trey's point, kind of where are these oil prices going? What about this demand destruction in other sectors? And so the original kind of idea was a 4 to 6 week timeline for this Middle East conflict. We got to those 6 weeks. Both parties agreed to a de-escalation, which the market took in stride. However, Vice President J.D. Vance and the negotiating team for the U.S. Went over and met with Iran negotiators. No permanent deal was put in place, which means that we're still dealing with this Strait of Hormuz issue. So while we don't have this ongoing military conflict at the moment, you still have this economic issue with the Strait of Hormuz, where 20% roughly of the world's oil goes through shipping containers and tankers.
Sure, that's the big issue.
Correct. And so Iran has kind of blockaded what's allowed to go through the Strait of Hormuz, as they mainly control that. They did allow 6 million barrels of oil for the weekend, but the U.S. announced that they're going to have an additional blockade to try to cut out Iran tankers from going through. If Iran's controlling the Strait of Hormuz, they say who can go through. President Trump is trying to install an additional blockade to prevent more things. So all in all, what does that mean? That means perhaps less oil going through the Strait of Hormuz for a longer period of time. This is Iran's strongest card to force change that isn't on the battlefield, and they inform negotiators that the strait's not going to be open until there's a permanent peace plan. So where are we looking at for ongoing oil prices? As long as we kind of have this double blockade thing going on, oil may stay higher for longer. And it'll be interesting to see the demand destruction as these tax refunds kind of filter through the system.
No, you're absolutely right. And you may see shifts between military and economic tactics and strategies that'll be used. And we are going to keep our clients up to date on what's going on there. So we're watching it very closely. I've used this 10,000 times in our vlogs, Navigate. No pun intended, since we're talking about the Strait of Hormuz, but navigate through it. And we also will keep you updated not only in these vlogs. We're always available one-on-one to do Zoom calls, in WebEx. Also our social media. Please, folks, understand. I've had clients call me and say, hey, I saw in your social media post on LinkedIn or what was on Twitter or Facebook, Instagram. Can I talk to you about that? And we've had conversations about that. We're frustrated educators here at Five Plan Partners. That's one aspect of what we do. And we want to make sure you're up to date and you're informed so that you can be confident as to what's taking place, not only in your financial blueprint, your portfolio strategies, but also when you're talking to others. Thank you to all of you who recently have been forwarding this vlog to others. We've had some introductions made, and we can't thank you enough for that. With that said, I cannot believe this is tax week. We're getting ready to hit that. First quarter is over with. The month of April is halfway done, and here we are. And we're going to continue moving forward. So we hope you have a great week. And just know here at Five Plan Partners, we're striving to see to it that all our clients have a better, richer, fuller life. Thanks.